Slides ready? Right, so what we're going to do is that we're going to take 20 minutes each, me and Brian. Then we'll have a Q&A.
Yeah, then we're going to have a moderated Q&A session.
Yep. Okay, how's everyone doing? Good? Right, so you're actually in the exciting slot, which is equity crowdfunding. Really, really new in Malaysia. As what Zelia mentioned, we're the first in ASEAN, second in Asia Pac, Brian? After New Zealand, right? So New Zealand beat us to it, so we're actually second in Asia Pac.
Actually, we're stalling time so that there are more people who come into the room.
Brian, I think you have to start because they can't read my... Oh, yeah, all right. Yeah.
Okay, the money's going to come, you just got to wait a little while.
Just a show of hands, who invests in public listed stocks here? Okay. Sam and I have actually discussed, how we want to present this. So Sam was going to take the part of the issuer. So if you are representing a company, i.e. you want to raise funding, Sam will take you through, on how equity crowdfunding, will enable you to raise money. For me, I'm coming from the investor point of view, which is equally important as well, even though you are representing a company here, because equity crowdfunding is all about, using the social media, okay, using your friends, using your clients, telling them about your company and your business, and enabling them, to invest in your company through the equity crowdfunding platform, okay? So I'll take you through some slides, just to give you an idea from an investor point of view, yeah? Did I press something wrong? All right, okay. Now I'll go through some of the regulated areas. This is as stipulated by SC, because we are governed and regulated by SC. So your question would be, what kind of investor category would I fall into? So SC has actually broken down into 3 categories. The first one is the retail. So per company that you can invest in, for a retail investor, is 5,000 ringgit per company. Okay, so it's per company. So if you have 10 companies that you want to invest in, you can invest 50,000. Yeah, and then the next category is the angel. Okay, and how they qualify angel is as long as you are registered with the Malaysian Business Angel Network. Okay, there's certain requirements, which you can actually find in their website. They'll look at your net wealth, they'll look at your salaries in order to qualify as an angel investor. So if you're an angel investor, per company, per issuer, you can invest up to 500,000, right? And then you have the third category where you are deemed as sophisticated investors, okay? You need to have assets of, net assets of 3 million and above if you're an individual, and if you're a company, net assets of 10 million and above, okay? And these are all per the SC guidelines, okay? So if you are categorized as a sophisticated investor, you can invest in an unlimited amount, okay, in a company. Okay. Now, benefits to investors. These are questions, and I think one of the typical questions that people ask is, will I see my returns? Are my principal guaranteed? So you should consider investing in companies that's on the equity crowdfunding platform. It's like investing in shares. Yeah. When I say shares, means it's the listed shares. There's no guarantee. in terms of returns. There's no guarantee in terms of you getting back all your capital. Okay, so you have to see that as really as an investment. So firstly, an alternative investment. Okay, my first question to you all is, do you all invest in listed stocks? So my next question would be, do you have a portfolio? Do you do asset or allocation? You don't put all your money into listed stocks. Yeah, that would not be a very sound thing to do. Some of you probably spread, your allocation. Put a little bit on listed stocks, put a little bit on FD. Maybe you buy unit trust. So that's a spread of asset allocation. So with equity crowdfunding, basically we are offering an alternative investment for you guys. Now, private companies' investment has traditionally been dominated by venture capital firms, PE firms, right? So when you see a private company, it could be a coffee shop, down the road, or it could be a cafe. Do you have the opportunity to invest? Before equity crowdfunding came into play, no. You probably just walk by and say, yeah, I wish I could, hold shares in this company, but you will not get a chance. Yeah, because it's dominated within the VC and the PE space. So with this equity crowdfunding platform, it will give you an alternative investment, okay? And it's another form of investment in your asset allocation. Opportunity to support development of business. Yeah, you see a business and you think that that you can contribute, not just in terms of capital. Maybe of some people that could actually help the company grow. So that is also another way, where this crowdfunding platform will enable you, to grow the business. A chance to fund the next big thing. Of course, there's no guarantee. We are all looking for the next big company, that's going to be valued 10 times, 20 times. But there is always that possibility. So hence, SC has kept it at 5,000, okay? Because they don't want to make it, they don't want to allow, public investors, to treat this like a gambling or speculative in nature, okay? But there's always that possibility. You look at a business plan, you look at a company with its product and services, and you feel that this is going to be big. And with this equity crowdfunding platform, it will give you that opportunity to participate in that. And last but not least, a way to support the dream of startups, and which is in line with what Magic is doing right here. Yeah, it's contributing, it's offering its facilities, for startups, and through the equity crowdfunding platform, through giving your capital, through giving your expertise, your network, it could fulfill the dreams of some startups. Okay. Now, this is also another very typical question that people ask, especially investors. So what is the assurance, what confidence can you give me that the companies that's going to be put up on the platform, they are good companies that, I'm not going to lose money, or, the company is not going to use my money for some other purpose. So there are some checks and balances, we operators, have put in, of course, at varying degrees, but these are some of it. Due diligence. So all those companies that come and see us as platform operators, we will go through a first level due diligence, where we will check, whether the company is really in existence. And then we will also probably meet the companies as well, the management of the company, and then we will study and assess the commercial viability of the business. So I don't think I can speak on behalf of Sam or all the other operators, but we do assess, in terms of commercial viability. So that brings our investment experience into play, yeah, because we want to make sure that those companies that we put up on the platform, they really have potential, okay? They have potential to grow, and they have a sound business model. Lead investors. We will be identifying some lead investors, and chances are these lead investors are sophisticated investors who would probably be putting in a big sum of money. I don't think any of us will be putting up companies where we will rely 100% from the crowd to invest in a company. So there will be some lead investors, fingers crossed, that will be part of this company. So with these lead investors being part of the shareholding of the company, it will give you, the public shareholders, the assurance. Yeah, because these lead investors, even though they have deep pockets, but they're not going to throw away money easily. So the fact that they have invested in that company gives you assurance that it is a good company. Next, legal documents. We will also work together with the lawyers to draft out legal documents. So all the companies that come and see us will have to sign the subscription and the shareholders agreement, and all these will be drafted by the lawyers, and all has to be agreed and all has to be standardized. Okay, so you won't have a retail investor that comes and say, I don't like this term, can you change this? Then another one says, no, I don't like this term, can you change it? So you'll be standardized, right? And then it will be drafted in a way, that protects the investors, okay? And lastly, post-investment reporting. Okay, so we are not going to make it as cumbersome, okay, like a public listed companies, where every quarter you have to publish your results. But we will encourage the companies, to keep in touch, with their investors, with their shareholders, to inform them the progress, of their company, whether or not they are meeting their KPIs, whether or not, they are progressing, in terms of their launch of the products, etc., etc. Okay, so again, this will give you some assurance that the company is heading in the right direction. And if the company is not heading in the right direction, then that's where the lead investor, who would already be a shareholder of the company, they will come in, and hopefully to redirect back the company to the right path. Just to share with you, get you all a bit excited, of what Equity Crowdfunding does to companies. Oculus Rift, okay, this company, this is a virtual reality head-mounted display. I'm sure you all have seen it, whether it's internet or the papers. So as at 1st September 2012, they raised 2.5 million, and the target was only 250,000 through crowdfunding platform Kickstarter. You all heard of Kickstarter? Yeah, I'm sure you all would have. So Kickstarter is a reward-based crowdfunding platform. So they raised that 2.5 million, and you all have probably heard in March 2014, they sold to Facebook for 2 billion. Right? Another one is Soyland. They're doing tremendous advertising right now. Raised 750,000 as at 20th April 2013 through Tilt.com, and then secured an additional 1.5 million of private funding. So this is also another reason, why companies use crowdfunding. Okay, it's to raise their profile to future investors. Okay, it gives that kind of publicity. It gives that kind of international profile to companies. Okay, so where international investors will be able to identify, and then in the future, they will take a stake in that company, arising from their publicity. So the crowdfunding campaign for Soyland raked in 754,000, exceeding its 100,000 goal. Okay, so these are some of the success stories that we have seen in US. Okay, so just a little bit before I close off about us. Propeller Crowd Plus, we are licensed and regulated by SC. We apply the venture capital methodology because one of the shareholders, Natural Group, is a venture capital firm. So they are one of the shareholders, and I was formerly from Natural, and they took me out from Natural, and right now I'm heading Propeller Crowd Plus. We have regional presence and access to international network, so we are not just looking at local shareholders, local investors, foreign investors as well, and we are collaborating with government agencies, accelerators, and incubators, to make this whole thing work. Okay, we also have this feature, what we call qualified matching investors. Remember just now I mentioned about lead investors. Okay, so we have actually secured some investors onto our board of a panel of lead investors, what we call QMIs, and their expertise range, from IT, tourism, outsourcing, to mobile. Okay, so a very diverse range of expertise. So these guys, they have the money, and these guys, they also have the experience and the know-how. Okay, so as a conclusion, crowdfunding is really the game changer. Okay, as I said, traditionally IPO would be a very safe option for any investors. Yeah, a very safe option because you're investing in companies which has track record, which is profitable. So low risk, I guess, low return. But what we are trying to do right now, is to manage the risk, okay, so that you as an investor will enjoy higher returns. Okay, so we are trying to, in finance, you said, you can only get high returns, by taking on higher risks. Okay, but what we are trying to do here, managing the risk so that you enjoy the same kind of returns, if you invest in a startup. Okay, all right, that's all.
Thank you, Brian.
Thank
I believe in the room there are actually a lot of entrepreneurs who would like to find out how can they put themselves up on the platform to raise the money. I would like to welcome Sam.
Okay, yes. As soon as we get the slides up. Okay.
Can I have a show of hand? How many of you in this room are actually investors looking at putting themselves onto the ECF platform to start investing? Oh, yeah, we have more of the ones looking for money.
All right, so cool. All right, so we're now ready. So Brian just discussed some of the issues surrounding investors. What I would like to do with you guys is actually share information about what issuers or entrepreneurs or companies need to do before and during when they actually raise money on the crowdfunding platform. So quickly, I think Brian mentioned this, there are 6 companies will be given the license by the Securities Commission out of 21 who actually, 27 or 21? 27, I think, yeah? 27 who applied. So we were the lucky 6. Local guys is ourselves, Pitchin, Brian, obviously, from Popular Crowd Plus, and then our friends from Atta Plus. These 3 guys are local, while the foreign players are Crowdo, based in Singapore, funded by me. I think originally they were from Sweden, Brian, yeah, Sweden. And also Eureka, which is really based in the Middle East in Dubai. So this is the lucky 6 that were chosen by the Securities Commission to actually be the platform or the legal platform for issuers and also for investors to play. Yeah. So now, if you guys, the first question that you guys may have is that who are these guys who could actually raise money? It could be anyone, as long as they are incorporated in Malaysia. However, those companies need to be private companies and they cannot be public companies, not Berhad companies. Yeah. So if you're a Berhad company, you can't actually raise money on the ECF platform. Yeah. So SE also has actually came out with several conditions in terms of what kind of companies that can't actually use the platform to raise money. So first of all, if they see that the company has a very complex structure in terms of how it commercializes its businesses or financially, then they would not want these companies to actually raise money on the platform, right? Now, if you're a public service company, as I've said just now, you can't actually raise money on the platform. If your company has no specific business plan or the plan is actually to merge or acquire an identified entity by raising these funds, you also can't actually raise money on the platform. So if you actually want to raise money to provide loans or make investments, you can't unless you are raising a microfund. I'll talk later about the microfund, yeah, which is quite exciting. And also, if your company actually has a paid-up share capital exceeding 5 million, you shouldn't be actually playing in this particular field. You should be going at the Bursa. And also, clause F, I think SC wants to be very, very, very smart. Later on, they don't know what's going to happen. They will give them the power to disallow any other companies that come out later with funny business ideas. Yeah. Right. So how much can I raise? Now, this is the number one question that any issuers or companies would like to know. So how much can I really raise on the ECF platform? You can raise up to 3 million within the 12-month period, and in total you can actually raise up to 5 million. Yep. So basically looking at your what you call Series A possibly, yeah, in Malaysia. That's where I think a lot of companies are struggling after they get the seed round. And normally, after they get the seed round and they fail to attract more investors, that's where they actually die. So the idea about the ECF or the idea about the Securities Commission is actually to fill that particular gap. Yeah. Now, the thing about the ECF is imagine it to be like a mini IPO, right? Now, for you guys to go IPO, you know it takes a lot of money, yeah, for you guys to spend, and also a lot of regulatory hurdles that you need to actually leap before you can actually go for IPO. Even when you're actually listed, there are so many things that you need to adhere to. Now, in the ECF, those responsibility is still there. It's just that the hurdle is not as high as you're going for IPO, yeah? So there are disclosure things that you need to provide to us, the platform operators, be it approaching Brian, be it approaching myself, or the other 4 platform operators. We need information such as your company, what are the key characteristics of your company. We need to know what's the purpose of the listing, the target offering, so we need to know all that. And most importantly, we need to know the business plan of your company. Yeah? So all this is part of the due diligence that Brian and I will do prior to accepting any company on the platform. Yeah? Also, there is a need for you to also share or disclose financial information about your company. Now, what the framework or the regulatory framework has done is that they divided this requirement into 3 categories, depending on how much you want to actually raise money from the public. If it's below 300,000 ringgit, it's much more easier. You need only a certified financial statement information by the issuer's management. Yeah? Even if you don't, it's entirely up to the platform operator whether we want to accept you or not. If it's between 300 to 500,000 ringgit, we need audited financial statements where applicable. If it's not available because you're less than 12 months old, a certified financial statement or information by the issuer's management. However, if you're looking to raise above 500,000 ringgit, then we need audited financial statements of that particular company. Yeah? So we didn't make these rules, SC made it. Yeah? All right, now, since issuers will be going out to the public, trying to raise money, and again, as Brian correctly mentioned, SC is quite anal, or the authority is quite anal about investor protection, which means that we will be watching issuers like a hawk. Yep. So we need to ensure disclosure documents lodged are verified for accuracy. Yeah, because we're playing with people's money. Yeah, not VCs, not angels. Well, they will be coming, but the whole idea is that we're trying to protect the crowd. Yeah. Where the retail crowd would possibly be investing in some of your companies. Yeah? So we need to ensure that the fundraising limits are not breached. We need to check your background of the founders and directors of the issuer company. We need to verify the business proposition that you're actually starting, monitor your conduct, and take action against misconduct. Later, I'll probably just share with you what I mean by that, or what SC meant by that. Then we need to also ensure that the target amount sought is raised. There is no material adverse change relating to the offer during your pitching duration, i.e. if you're pitching for 60 days or 90 days or 120 days, the information that you shared initially should not change. If it's changed, you need to inform everyone, yeah? Because it may result in a material change in your offering. Yeah? Also, we need to ensure that the cooling day period of 6 days is adhered to. What I mean by this is that once you are successful in raising money, after the last day, there is a 6-day cooling period for any parties to actually change their minds. Yeah? So investors have 6 days to rethink. No, probably the wife would tell the husband, take it back, I want to go to holiday. Yeah? So they can. Yeah? Or even you guys, the issuers or the companies, you don't like any of your investors there, you suspect them as probably a competitor, you can say, no, I'm not going to take your money, which means that you probably not get the whole money. Huh? So there's also a risk there. So what is material adverse change? This is discovery of false or misleading statement. If that happens, then the company or the issuers will be in deep trouble, not only with us, but also possibly with the Securities Commission. If there's a material omission or information required, again, material adverse change, or in terms of the development of the company, and you're not highlighting that to your investors, that also could lead to a material change. Yeah? Now, most importantly, communication channels is one thing which the SC wants all platform operators to have. It's just like a message board, where you and I, or the issuer and the investor, could actually interact prior to the investor making a decision whether to invest or not. Yep. And this will be watched like a hawk, not only by us, but by the Securities Commission, to ensure that the communications between both parties are civilized, yeah? Especially issuers giving right, honest, true, transparent information to the investors. Yeah? Now, most importantly, how, of course, Brian and I are not doing this for charity, Brian, are you? No, right? Yeah. So we have fees to be paid. Why is not a number there? Okay, so here, I'm not sharing the number yet because we're still looking at what people are doing, trying to get Brian to tell me how much he's actually charging you guys. But globally, from what we see, operators that does the ECF will charge between 5 to 7.5% of the total money that you actually raised. I think the highest that's being charged is actually CDIS. Yeah, 7.5. CDIS in the UK, they do 7.5. Yeah, so it's between 5 to 7.5% of the total amount that you actually raise. Yeah. However, there will be terms and conditions that we applied. There will be possibly some companies or some platforms who may charge initially for you to list. Yeah, because we see that also in Crowdcube. I'm not sure whether they're still doing it, but every platform will have their own reasons why they are charging A or B or C. Yeah. All right, now, no cheating, guys. You cannot raise in multiple platforms. You like Brian, you like me, you can't have both of us. You need to decide, it's Brian or me, right? So you can't do multiple platforms. So if you fail in pitching, later you can go to Brian. But you can't try to raise money at the same time on pitching or Crowd Propeller or Propeller Crowd Plus. Yeah? So you need to choose one. If you fail, then you could actually go to another platform operator. Most importantly, in Malaysia, although we say it's a crowdfunding, raising money from the crowd, unfortunately, because of legal requirements, our crowd right now is limited to 50. Yeah, because of the Companies Act, which limits Sdn Bhd to 50 shareholders. So if you take away 2 original directors or co-founders, the minimum, you have 48. Yeah. So how do we circumvent that? If we really, really want to have more people coming into supporting our companies, the way to do it is through a nominee structure. Yeah. I think which I think Brian is doing it, will be doing it. I can bet you all the others will be doing it. Yeah, and it's allowed by the law. So the way for us to actually get around that 50 requirement shareholders is through a nominee structure. Yeah. Now, another interesting part, and again, issuers, apart from companies raising money for their own, now issuers could also mean people who are trying to raise money for their own VC fund. Now, it's called a microfund, which is quite funny because if you look at the requirements of the SC, is that microfund has no limitation. Well, companies like yourself, and I'm sure some of you guys, the majority of you guys are entrepreneurs, you can raise up to 5 million, yeah, in terms of capital. But for microfunds, if you're a VC, the great news is this, there is no limit. You can raise as much money as you want on the platform. Yeah? However, you can only raise it through sophisticated or angel investors. Retail guys are not allowed to invest in this microfund. Yeah? So the other interesting thing about the framework that we have in Malaysia is this. Brian and I, or our companies, Pitching and Crowd Propeller Plus, could actually invest up to 30% up to your company, to the issuers. For example, we like you so much, you actually funded 3 million, rather than take my X amount of, I'm not going to give the amount because then Brian will be calculating, 5%. So I'll be taking whatever fees that I get, and maybe I'll do a deal with you rather than give you money or give me money. I'll probably take some shares in your company. Yeah? So that could also happen. But up to 30%. Yeah? So that could happen. So how does it work? This is really a brief summarize in terms of how something will work when you speak to any of the platform operator. Now, first of all, you have to apply. Now, in some cases, we will be doing the scouting for the companies. Yeah. So when you apply, we do due diligence. We look at your company. We do every compliance method that we need to do before we then say, okay, you're good. Now comes the most interesting part, which is the valuation. Yeah. Interesting because every founder, because I'm a founder too, Brian is a founder too, we think our companies are worth $1 billion, right? Now, we need to find a valuation where it will be interesting and really attractive to both the investors and also the founders. So this will be interesting because it will take some time, yeah? And once we come to agreement that the valuation is fair for every parties, we will then list you. Prior to that, as what Brian also alluded to what Propeller Crowd Plus will be doing, we may be shopping you around to a group of investors first, even before you go live. Depending on which platform you go to, that may be the case, that may not be the case. So when you list, you then tell us how long you want to be listed. It could be 60 days, it could be 90 days, it could be 120 days, and depending on how you perform, whether you could get funded or not. Yep. So that's typically how it will work. So how does valuation works? You know what? Everyone has a way in terms of how they do this. We have our ways too. I'm sure Brian has his own secret sauce to do this. But every company would not be the same. Yeah. So I can't really tell you right now because if you were to see me, I will look at your company and then I will then be able to tell you how much I think you are worth in terms of getting investors to invest in you. So lastly, so the combo, what would be the secret recipe in terms of ensuring your company as an issuer would actually make it, would be successful in terms of raising money? Now for us, it's about three things: team and community. Whether you have a great team, great founding team, also whether there is also already a community, clients, partners who are supporting your businesses. Yep. First thing which people would look at. The second thing is the business. Are you guys in an interesting sector? No, is this a sector which is growing by leaps? Yeah, which will excite investors. So we want to look at also at that particular point whether this is really a great business to be, and also issuance or the valuation. We have to agree on a fair valuation so that we can attract people to actually invest in you. Yeah. So when you have all these three lined up together, then I'll think it'll be a winner. Yeah. So lastly, before I just close down, just a brief introduction of Pitchin. We've been doing crowdfunding since 2012, starting with Reward. It's still running. So hence we'll be running both Rewards and Equity. We also run a tech accelerator called Watchtower and Friends Accelerator, or WTF. Some of you may have heard of us, some of you have not. So we understand the ecosystem. We're startups ourselves. We work quite a lot with angels and VCs. I myself, I'm a committee member of the Malaysian Business Angel Network. So if issuers were to come to us, you'll be talking to people who not only understands what you are as issuers, but also we're also investors ourselves. Yeah. So thank you. So Zelia.
Thank you, Sam. I had a show of hand earlier. I think a lot of the people in this room are looking more to raise money. And ECF, we are envisioning it to shorten the time for you to raise money as compared to if you were to go to VCs and PE firms. Negotiations take very long. Nobody's going to hold your hand in terms of actually teaching you how to do valuation, how to package yourself nicely and go out there and appeal to investors. Once you talk to VCs and all, you may not know the next time you will hear from them again unless you are extremely appealing in the first meeting. There are certain pressing questions that I've had from entrepreneurs who have come to me and asked me about, if I want to raise money on ECF, going to VCs and PEs, like I mentioned earlier, you really don't know how long it's going to take, right? So how do you think that having ECF is going to shorten or make the complexity of fundraising to be less of a pain for startups? Brian?
Okay. I think those how many went for the World Capital Market Symposium last week? No? Okay.
Too busy.
I didn't see you there.
Outside,
Oh,
eating.
okay, there were very good discussions on this, and that's from the regulators' perspective, on how they want to manage the risks, of equity crowdfunding, and balancing, the fact that they want to protect the investors. At the same time, they don't want to make it too regulated, until it becomes like a listing exercise, like an IPO exercise. Okay. So your question is, yes, it will be shortened in a sense that there will be that buyers beware, caveat emptor, buyers beware, because this is something that a risk that you as an investor will need to realize that it's going to be a high risk. You cannot equate this with a listed company, right? But we have checks. We have checks within our process, and I'm sure it's the same with the other operators as well. Where company submits, as Sam pointed out just now on the process, company submits information, and then we will have a process to look through the information, and then going on to studying the commercial feasibility. And remember, just now I mentioned as well that there will be legal documents that's already drafted. Okay, so you don't have to start drafting a legal document from scratch, blank piece of paper. So there's already a draft legal document, that's ready to use, and then really basically making sure that we are confident, that when we put up the company, that this has a sound business model, feasible in terms of its business, etc., etc. We put it up, and then for the crowd to invest. Okay, so this whole process we are envisaging, it will take between 2 to 3 months. And the beauty of it is, it's on a purely success basis. That's the beauty of it from the company's point of view as well as from the investor's point of view. Because if we don't meet that minimum amount, if the funds raised don't meet that minimum amount, then all the monies are given back to the investors. Okay, and as operator, we don't earn a single cent. Okay. So from the company's perspective, it's good and it's very attractive because you don't have to pay. You go for an IPO, easily your upfront will be $1 million or $1 million plus upfront, and you will not be able to claw back, if it's unsuccessful. Okay, so really through our process, through our SOP, we will shorten that whole process to enable fundraising to be actually completed within 2 to 3 months.
Thanks, Brian.
Right. I just want to follow up with what Brian mentioned about or your question, Zila, about how would this be attractive in terms of helping entrepreneurs to actually raise money when you can actually do it right now with VCs and angels. And I think when we listened just now to the last panel discussion about the amount of time being spent talking to angels, VCs, trying to secure a round, right? Because angels and VCs are trying to size you up, and they can't size you up within a meeting or two. Probably several meetings, right? So what we're doing, Brian and I are doing, and the other 4 platforms are doing, is that we're going to take all that pain away in terms of your attractiveness. Because by the time you're ready to be listed, you're very attractive to investors. So it's now really for us to pick the right investors for you guys to actually then be funded too, right? To be funded. So I think this is where the beauty of the ECF is, because you take away the pain of actually going through all that exclusion meetings with all the angels and VCs, because you've already gone through the due diligence and compliance with us. So by the time VCs and angels come in, it's really the appetite for the risk that you bring in terms of your company. Yeah? So that's why I think ECF would actually not only just help but complement the whole ecosystem of matchmaking between investors and also issuers.
Yeah, touching on a point, Sam, you mentioned earlier as well that, if I'm an entrepreneur and I'm trying to raise on your ECF platform, and then at the end of the day, I reach the target amount that I'm going to raise, and I also realize that I have my competitor that has actually say that they put in the money there, that they want to invest in me. I don't want their money because they are my competitor, right? Yeah. Does it mean then, if I get rid of them, then I don't hit that target amount? So am I going to lose it All?
Unfortunately, yes. Unfortunately, yes. What the SC has allowed is this. People can take back their money within that 6-day cooling period if they decide not to. So for example, Brian puts his money there, and it's like that's a saving for the holiday, right? And the wives tell me, Brian, take back the money. Brian will take back the money. But on the flip side, if you see someone who you think or you suspect is a competitor or someone you just don't want their money, so you can take it back. But the result is that you may lose the amount that you're trying to raise money. Yep. So there's a flip side to it. But fundamentally, you could actually not take money from a specific person, while the person themselves could actually take back or decide to withdraw their offer during that 6-day cooling period. Yeah.
So is there a way where both your platforms can basically facilitate, like, you do the vetting of the investors as well that comes on board, right? But that's on a general basis. But on a specific deal-by-deal basis, do you also have some checks in terms of the people that are saying that, hey, I want to put money? What if you risk, there are these guys, they are, trying to play a fool, and for every deal that I know they lack, like, say, another 5,000 to meet the target, right? I put it in, and within the 6 days of cooling period, I decide to put it out. So would the platform be able to sort of, say, blacklist this guy and not have this guy on the platform?
Well, the 6 days requirement is given by SC, so, there's no way, even if the guy puts it in and then he takes it out before the expiry of 6 days, we have to allow that. So I don't think we can blacklist that investor. Yeah. And as far as competitor is concerned, there's many ways to go around it. I don't have to, if I'm the competitor, I don't have to personally invest. I can get someone else to invest. So, yeah. So again, that's why I tell companies that you don't have to worry, because if a shareholder demand to see your trade secrets, you're not obliged, to provide this kind of information to shareholders. Okay, so the information that you provide to shareholders are really the basic financial information, which you need to submit to CCM anyway, and your business plan, which could be some general business plan. So really, companies don't need to fear, if there's competitors being an investor, whether it's by name or someone else. Really, it's not your trade secrets that you are going to divulge.
I would agree with that. Yeah.
So as an entrepreneur, if I raise on ECF and I'm successful in doing so, right? How much time am I supposed to, how cumbersome it would be then for me to be reporting to the investors? Is there like a fixed rule in terms of, like, I need to report to them every 3 months? And what exactly is it cumbersome? Because, one of the things about being a listed company on a public stock exchange is that, the pain of doing reporting, it's taking up a lot of, So what will happen to startups who can do
Well, fundamentally, you don't have to. This is not the Bursa Saham, so there's no regulatory requirement for you to actually report on a consistent basis to your to your funders, to your investors. However, I think it's just good to do it, right? To actually update and inform your investors of anything or new things that you do. It's just good investor relationship. And I think as companies, and when you have a goal, either you're thinking of trade sale or IPO, I think it's always best to have that discipline. I think Brian alluded to that too. I think we agree. I think that's what we want companies who are successful on our platform to do so too, to follow up on announcements or they call sharing information with your investors, because these guys are investing in you, their hard-earned money. So at least they deserve information and updates. So there is no requirement, Zelia, in terms of regulatory. You don't have to. You could actually just don't do anything. You can, and you won't be in trouble. It's just that we think it's really, really good investor relationship for you to do so.
Okay, can I just add? I mean, really, from the company's perspective, you may think that this is very burdensome, to update your investors. But imagine, you're updating your current investors and also your future investors as well. Okay, you raise a Series A, your Series B and C, because you have been regularly updating your investor. They know what's going on. They see the growth of your company. It's easy, to get investors, number one. Two, you will get a much higher valuation. because of your consistency in terms of reporting. So the company's got to see that cost aside or the hassle aside, the benefits are, far outweigh, the hassle or the cost, so to speak.
Okay, because we are pressing for time, we're going to close at 1 o'clock. I just have one last question before I open to the floor. Like we have heard from this morning, there are 6 of them here for you to choose. I have 2 of the big guys here. What is it that, how will entrepreneurs or startups choose which platform would be best for them to list? I'm giving you a marketing opportunity right now to basically say that, what would be driving startups to say that, should I go with Pitchin? Should I go with Propeller Crowd? I'm sure a lot of people in this room would have asked that question.
You know what? Good question, Zelia. And I think a question which everyone will have to decide, especially issuers. We got 6. We were hoping just 2, but no, they got 6. So now, from what we know, investors, there is no loyalty to any platform. Yeah, investors will go to the platform which has good companies, yeah, or great deals, and this is where all 6 of us will be fighting. Well, be competing, not fighting, competing to actually attract the best companies to come to our platform. Yeah. Now, I think my sales pitch is this. Now, we're in Pitchin, we're a group of guys who are not only building things ourselves, and hence we understand your pain and your dreams, but also we are investors ourselves, and hence we speak both languages. I think that's where our strength is. We're actually there on the ground, as what you guys are doing, building things and also investing. We've been doing this for the past, 3-4 years in Malaysia. So we know the pains and the points which I think would work in Malaysia. I think that's where our strength is. Now, in terms of if you guys were to come to pitch in, I think what we'll be doing more is really, really helping you guys to grow. Again, like I said, we are venture builders ourselves. In the end, we want companies who go and be successful on pitch in to be successful further beyond what they've done on the ECF platform. Yeah, so that's just a small pitch. The longer pitch, we'll have coffee or tea. Yeah.
Okay. To make ECF work, basically 2 essential parts. One is the companies, and then the other part is the investors. Okay. So from the company's perspective, as I mentioned just now, we are VC backed, we are venture capital backed. We have the know-how, on how to assess companies, to make sure that the companies that we put up, are quality companies. Okay, so we have designed a SOP, that has a lot of VC elements in it. Okay, but not making it too onerous. Okay, we are not trying to form another mini VC through the platform, but sufficient elements, to make sure that the companies that we put up are quality companies. Now, on the other side, the investors, as I showed just now, we have identified a number of lead investors, or what we call QMIs, with diverse industry expertise and experience to be able to help companies. Because we are not just looking for investors, as in the big investors, not just looking for their money, we are looking for their network, their experience, in helping the companies grow. And this is one gap, which is very evident in a lot of startups today. They don't get enough coaching and guidance, from experienced entrepreneurs.
Thanks, Brian. Thanks, Sam. I would like to open for questions from the floor. Any questions? There.
Yes. Hi. Do the retail crowd come in on the same valuation as the lead investor? And how many, what's the minimum that you need to raise from the lead investor? And then my final question is, what are the exit options for the retail crowd? Do they just have to tag along the lead investor, or are there other options as well?
All right. There's no minimum amount because it's really up to the operators how they want to set, with the lead investors. But obviously, we're not looking to them putting in 5,000. Yeah, so there's no minimum amount. In terms of valuation, yes, it's the same, unless we do a private deal which is out of the platform. Okay, so that can be worked out as well, but we encourage all the investors to come through our platform. Okay, what's the other question?
Last question is the exit. Yeah. So in terms of retail, how do they exit? It's unless there's a trade sale or IPO, you're actually stuck with the company. However, and this is something which I think all platforms will be talking much later with the SC, is that the SC is looking to actually creating a secondary market where after 6 months of the company being funded, there'll be a 2-week window for the investors that came in during the crowdfunding exercise to actually sell their shares in the open market. So it's probably willing buyer, willing seller. I'm pretty much sure that the first right of refusal will go to the founders, who may want to buy back their shares. Yeah? So that's the what you call the exit plan of retail investors. We get a lot of these questions, these questions from people. How do I exit? Because I think people are imagining it to be like the Bursa Saham, or the stock exchange where I buy today, tomorrow I sell. Unfortunately, you can't do it here. It's a long-term investment. But again, it's what Brian mentioned earlier. The rewards are there at the end of the tunnel. But we're working with SC to actually create that formula with that 2-week window. Yeah? It probably may happen after one of us go live and the first company gets invested. That's where you probably see that 2-week window happening.
Any other questions?
Hi. 2 questions. One is, what is the nominee structure that you mentioned when you go over the 50 shareholders? And the second one is, what happens to the equity capital ratio if you're oversubscribed? So let's say 100 grand for 10%. If you raise 300, what happens to the 10%? Is it stays or?
How is it? Your first question is the nominee structure. Right. Right. Yep. So we're actually the law says that you can't have more than 50 shareholders in this number, which means that the crowd can't be more than 50. So to circumvent that, what we're doing is that we're going to create a nominee company that will then represent those other guys who may want to subscribe or invest, but they can't because of their 50. Yep. So these guys will then go directly. Yeah.
Okay, so that means if there's 300 shareholders, you have 4 or 5, 6 nominee companies, because each nominee will be limited to 50 as well. Yeah.
Yep. Yeah. Second question.
If they're oversubscribed.
Yeah. Right. Okay. In terms of the valuation of oversubscribed, we've seen models in the UK where they would actually prepare people. If it was oversubscribed, the valuation will be at Y, right? So for us in pitching, I think we're probably going through that model where we already prepare people. Now, if this is oversubscribed, then you guys that come in later will probably be at that particular valuation. Yeah, it's a tier. Yeah. So we've seen some of these things being done in the UK. Very much more matured ecosystem compared to the other parts of the world. And I think we'll probably be following that. And hence, when we discuss with issuers, we will have that conversation. If you oversubscribe, then this is the valuation. And if both agrees, then we'll go that way. Yeah?
Time for one more question only. Any other question? Nope. Oh.
My question is, as an entrepreneur and a business owner, okay, obviously the question comes in who has the controlling stake of the company, which basically is the shares, number of shares in the company. Now, typically for each series of fundraising, there's a certain percentage. So I'm from the earlier talk, probably 25% of the first fund. So now when it comes to crowdfunding, how does that work? Because are you also going to do it the same way a VC would do, and what's the maximum of the capital of the shares that you would be taking? And the second part of the question is, based on the valuation, how do you correlate that with the number of shares in the company? Because as a startup, it could be a smaller company with 100,000 or 200,000 or 300,000, whereas he's trying to raise $1 million in funds to do the research R&D of the product. Now, how does that correlate, and how do you actually invest based on the holdings of the shares of the company?
Sorry, when you say you means investors, yeah? Investors, yeah. Okay, for startups, obviously valuation is always a challenge, yeah. If they give us a very unrealistic valuation, then we will tell them that it's not going to work. That we are not going to put up the company onto a platform because it's way above the market valuation. Okay. Now, in terms of what is the percentage, we will guide them. I'm very careful not to use the word advice. We will guide companies, on not giving up too big a stake at the early stage, for obvious reasons, right? Because at the early stage, your valuation can't be that high, okay? So there will be some guidance. They can't be over enthusiastic and say, yeah, I want 1 million and I'm willing to give up 40-50%, yeah. So your question is subsequently, right? What happens to their stake? The actual shares of company. Of course, there will be new shares that will be offered. Each time there is a fundraising exercise, so there will be new shares that will be offered, and there will be dilution to the shareholding of the management. That can't be avoided, okay? But it's a question of each time you do a new fundraising, your valuation would be higher for sure. So your dilution will not be as much as previously, okay? So maybe your question would be, what if the management loses control? Holds 50%. So you have to look at the blocks, because if you hold 40%, doesn't mean that you lose control, because the rest of the 60% could be spread out, with many people, many investors. So you still effectively control the company. I hope I answered your question. Sam, you got anything to add?
If you're not clear, you can catch both the gentlemen outside, yeah. So I hope you guys knows about ECF. That's an alternative for you to raise your funds from. You don't have to speak to VCs that may not understand what you do. You can speak to these two gentlemen here. Thank you.
Thanks, Brian, Celia, and Sam. So we're going to break for lunch, and